Hortonworks Inc. That's HDP. What exchange that on? That's on NASDAQ. Technology sector, software industry, guys. We know what that's looks like. Let's go peek over that right away. So do that first tree approach. Is the index healthy? Where's my NASDAQ? He keeps going up. Stage 2, 12-month moving average going up. Sector. Technology. Looks pretty much like the NASDAQ, right? And industry, software. Software, what is that? Software industry. And what does that look like? Same thing, man. So we got all that, all aligned, all in the same trend on the monthly. That's a higher prevailing trend. So for our little HDP, Hortonworks, it's going to get pulled up, dragged up by the rest of the index. So let's just do right now, monthly defined. Breakout line. And right now, this August, we have a confirmed breakout on the monthly candle chart. What is my target? And target of 24 for HDP, guys. Ding, 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 ding. Let's scoot over 5 weekly Stan Weinstein chart. Look at that, man. Stage 4, stage 1. Even Horton, man, this is looks like a stage 2 continuation breakout, guys. Stage 1, beautiful. Stage 2, stage 3, when you start having price action below the 30-week average, and always stage 3. Never had that break below that horizontal breakout line. You still were above the Ichimoku cloud, the support line. So that's a nice stage 3, and now it's going to convert back into a stage 2, which it already has. Arrows. Look at the volume. You could reverse engineer. Look at the volume, and then you'll probably find a big candle. So if you have this candle, it's twice the average of the previous 4 or 5 weeks. Most of the time, I have a candle breaking out above a horizontal support, and it's just uncanny. Here. On the weekly, even here, did the double whammy, and did it do a triple whammy? That is going through 3 different, and it did, guys. Oh, embryonic breakout. Is it here? At the same time, it's a double breakout, guys. Pull back 1, 2 weeks later, and then scooting off, still outperforming the SPX. A lot of positive stuff here. Going through halfway point. Monthly candle breakout. Target 24. Look above Ichimoku cloud. Not much to say here, guys. Could do a little reverse engineering on the. I love doing this. When you see those candles, volume building up, twice the average, a burst. What do you have? You have a stage 2. Breakout. Remember, Stan said incline 30-week average. If this is green highlighted, that means it's inclined. I'm above it, 30-week average, and I'm outperforming the SPX. So this is our triple confirmation. When you look at the volume, it's just awesome. The only thing here that didn't like is overhead resistance. So if you didn't want to enter here because you're using Ichimoku cloud to define that resistance, then you would have been able to enter here on the second breakout right here, just a little bit further. Price action towards the 30-week average. That's called a stage 2 continuation breakout. Breakout candle. Right here. Oh! Look at that volume candle. The Mansfield relative strength was going down and then upwards. Never buy when it's going down. Wait for it to turn a corner. So you had this entry here. You had this one. Look, even here. Look at the volume. Always, man. So reliable. Sideways move towards the 30-week average. See how far it's like an elastic, how far you're off the 30-week average. Not a good time to enter right there. Let it move sideways. See what the market decides, and after that, if it's going to bounce off this this area here, and if it does, then that's when you could go in. Or you could play the pullback. Usually a stand that says that you could play the pullback on the initial breakout. Always happens within, not always, but most often happens within 1 to 3 months. You had it here. Ooh, pullback. This zone here, that's a good area to get in. The risk to reward now, it's better than buying on the breakout here. You have this horizontal breakout line, previous support, previous resistance, now turn support, protecting you, giving you a cushion. So it's all pretty good. All this, these steps. Had another one here, and after that, sideways move. You had a couple of warning exits. Remember, entries are nice, but 1, 2, 3. That's super well drawn. Stands trend line is for a break on the 4th. So 1, 2, no, so that's not good. 1, 2, 3. I don't think you could have drawn the trend line, but you would have definitely exited here, the break. When you break the 30-week average, if you're the traders, you're always out. If you hadn't moved your sell stop, maybe here, this could have been the sell stop right here, but it gets close. So for this one, that's how you would have exited, about at this level. You would have entered at these levels here. This one, this is how much you would have made. Or from here to here. But you never get out the top of stand. You never enter at the bottom. You catch. It's designed to catch most of that run, that stage. And now what's happening today? Breakout, pull back. And if you're not sure about which of these resistance line is the best, well, just let time unfold, right? If this pulls back and goes right through a level that you have identified as resistance, then that was less meaningful until you hit the one that is really gives you the bounce, something like that. If it would have went down here, then these two would have been less reliable support, and this one is the one that held, that went up. But the only thing is you have to wait, let time. Don't try to guess the pullback where it's going to stop. Make sure it really pivots. Even here now, the pullback, I'm not quite sure if it's done yet. Even if you're in a breakout, could decide to come back. What I look for is lulls here in the indicator, RSI or Mansfield. When you see go down and up, usually that's an area where I could have moved my sell stop along the way. And right now, we just don't have that yet. So got to wait here for the pullback if you want to enter. On the breakout, well, you could enter here, but you don't know which pattern is going to hold best as a support. So it's a definite stage to breakout, or you could play it on using my monthly chart training framework. And because you have a monthly candle close, that's the target you should have, guys. But the sell stop might be too far away. So you might just want to skip that play right now and just wait for the stand play to play out. Wait for a pullback around, and whenever it starts forming a V shape on the Mansfield relative strength, then you know you're getting, that was your low and you could enter. All right, that's it. HDP, man, it's fun to see an IPO get back in there. All right, ciao.